Welcome to our JA Spring Money. Today's market session tells a compelling story of resilience and opportunity. Indian equity market extended the rally for the third consecutive day, riding high on the way of US Federal Reserve dovish stance and the positive global liquidity flow. Next, we will look into the key highlights for today. First one is the Sensex, which surged by 0.39%, and second one is the Nifty, which gained by 0.37% to settle at 25,423.60, firmly above 25,400 resistance. And the main reason for this rally is IT and Pharma sector led the charge with the stellar gains. And next is the banking Nifty, which extended its winning streak to the 12th consecutive session. As we already saw, if the gold declines, then the dollar strengthens. That means the gold price had declined by 0.43%, and as the dollar strengthened, the rupee weakened by 0.24% against the US dollar. Next, we will look into the positive news. There are two main positive news for today. First one is the US Federal Reserve rate cut, and the second one is the India-US trade optimism. And on the US Federal Reserve rate cut, I already informed that there will be a 25 basis point rate cut is possible, and as there is a probability of 96% for it. And the same 25 basis point rate cut had happened yesterday, and now the Fed rate is at a range of 4 to 4.25%, sparked the optimism across the Indian market. Fed Chairman Jerome Powell signals of two more potential rate cut this year, boosted the sentiment for the emerging market like India. And the IT stock led the rally by this news, where Infosys, Wipro, LTIMindtree, HCL all surged today, with all stocks benefited as US market exposure benefited from the rate cut. And the second point is the dollar revenue advantage from the weaker rupee, where Infosys gained by 1.48%, Wipro surged by 0.88%, and the LTIMindtree surged much higher by 2.56%. It's not only due to this news, also due to their strong Q2 outlook and the client addition. Now we will look into the second positive news, that is the India-US trade optimism. Whereas on this India-US trade optimism, there is a renewed trade discussion between India and the US provided a significant market support. And the chief economic advisor V. Anantha Nageshwaran stated that the US may roll back the 25% penal tariff by November 30, boosted the export-oriented sector. The potential tariff reduction could benefit nearly 50 billion worth of Indian export across textile, pharmaceutical and the IT services. That means all these three sectors would have gained today, and the same thing happened, where IT services surged by 2.1% and the pharma gained by 1.8%. And to be stock specific on this sector, the Sun Pharma from pharmaceutical increased by 1.19%, and the IT sector, which we already saw, the Infosys rallied by 1.48%, and all the IT stocks almost rallied more than 1%. Next, we will look into the negative news and its impact. There is two negative news. One is a profit booking at a higher level, and the second one is a FIIs selling pressure continues. First, we will look into the profit booking at a higher level. Today, the mid-session selling pressure emerged as the market trimmed the early gain of 1.44%, with the Sensex dropping 0.7% from the today's day's peak. And on this profit booking, the institutional investor booked a profit in a banking and auto sector. The profit taking was concerned in the overvalued sector, particularly affecting the momentum stock that had rallied sharply in the recent session, such as Coal India, Bajaj Finance, Trent, ONGC and the Tata Motors, were all dropped by 1 to 2%. And the second negative news is the FII selling pressure, which continued, whereas foreign institutional investor offloaded 1,124 crores on Wednesday, marking the persistent outflow pressure. Even though there is a high probability of rate cut, they continue to sell the Indian stock. Today's detail regarding the FII inflow and outflow I am yet to receive, so tomorrow we will discuss on it. Next, we will look into the macroeconomy, and on the macroeconomy, first, we will look into the US, whereas Dow Jones gained by 0.57% due to the Fed rate cut optimism. The financial and cyclical stocks benefited from the lower rate environment expectation. Next, the S&P 500 declined by 0.10%. The main reason is technological sector weakness. And the Nasdaq also declined by 0.32%, and the reason is due to the same technological sector. Next, on the Asian market, we will check into the Nike 225, which is dropped by 0.25%, and the main reason is the Japanese export faced a pressure from the currency movement and the trade uncertainty between US and Japan. Next, on the Asian market, we will see the Hang Seng, which is gained by 1.78%. It is due to the Chinese tech stock rallied on the domestic stimulus hope and the AI partnership. Next, on the European market, both FTSE 100 and the DAX had gained, whereas FTSE gained moderately by 0.31% and the DAX gained by 1.37%. Next, we will look into the currency and commodity trends. The dollar index recovery to 97 from 96.873 suppressed the market despite the rate cut. Because if there is any rate cut, the dollar index will fall, but the gold will strengthen. But today, it had happened in a vice versa, whereas dollar index recovered, but gold future fell as a rate cut expectation were priced in, while the oil price remained stable on the demand outlook. Next, we will look into the key catalysts ahead. There are two key catalysts for today. One is the RBI monetary policy, which is expected on 1st of October. The market expects RBI to maintain its cautious approach while considering the global rate cut. Because if there is any divergence in India-US rate differential could impact a foreign flow and the rupee stability. Next on the catalyst is a Q2 earnings session. Major corporate company earning announcement are expected over the next 2 to 3 weeks. IT, banking and pharmaceutical sector will be closely watched given the recent outperformance. The expected impact of strong IT earning could sustain the current rally, while disappointment in banking or auto sector could trigger a correction. Next, at last, I will wrap this video with the 3 key takeaway and the 3 key checklist. The 3 key takeaway for today are Fed rate cut catalyst, technical breakout and the sectoral rotation. On the Fed rate cut catalyst, the 25 BPS rate cut reduction has opened the door for the sustained foreign inflow into the Indian market, particularly benefiting the IT and export oriented sector. On the technical breakout, Nifty decisive move above 25,400 with a strong volume suggests a continuation towards a 25,600 to 26,000 level in the near term. Next on the takeaway is sectoral rotation. There is a clear shift towards a defensive stock like IT, Pharma, Insurance, while cyclical stock faces a profit booking pressure. Next, we will look into the risk checklist. First one is monitor rupee weakness. Second one is watch FII flow. The third one is the global trade tension, and fourth one is the earning expectation. And on the monitor rupee weakness could impact the import heavy sector and the FII sentiment. And the second one, watch FII inflow because there is a persistent selling pressure remains a key overhang. And the third one is a global trade tension. Any escalation could reverse the current optimism. And the fourth one is a earning expectation. The high valuation need a strong Q2 result for the justification. Suppose if the earning is not up to the valuation, there are high chances of the fall from the rally. Thanks for watching the video. If you found this briefing helpful, smash the like button, share it with a fellow investor. Don't forget to subscribe. I am always open to the feedback. Please provide your valuable feedback in the comments. Thank you.